What's up, traders? Matt from the Trade Brigade here doing a technical analysis on FANGMAN. FANGMAN, of course, stands for Facebook, Apple, Netflix, Google, Microsoft, Amazon, and Nvidia. We're going to cover all of those tickers in one video today, shaking up the format just a little bit. Nonetheless, as always, on the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. Facebook is up first on the chopping block, continues to be bearish here. Note that the potential double bottom, something that would have looked like that, is no longer on the table by a long shot. The area of support from that pattern, which was here, 216.35, is now being confirmed as resistance. That's where we topped out on the Wednesday pop, and it's also where we topped out on this morning's first early morning sort of run higher. Okay, you can see that here on the 30-minute time frame. Notice support, resistance, resistance now. So 216.35 is the major level to be watching for, but we also have today's flush point from right here at 213.50 as resistance to contend with as well. Remember that when supports are broken, they then turn into resistance. So that's what we've got to the upside if we're going to start making a turn higher. Is there anything that suggests that? Not really, based on how we've closed here. If we take out the Fibonacci's, come in from the high all the way down to the low, notice that we never made any sort of dead cat bounce, and even if we did, the 38.2s up here around, let's just round off and call it 211. In the post market, we're still trading around 207.70s, 207.90s. So it's not like there's been a dramatic push higher in the after hours. Doesn't look like, at least as of right now, the market wants to give us any major reversal. If there is going to be a reversal, because we should talk about this at least, right? It needs to do something like this. It's got to produce a higher low and then a higher high. Notice that this little double bottom right here was not able to produce the higher high. That's the critical component of changing the trend. You need the higher high after a higher low for the trend to definitively change back to the upside. It never happened here in Facebook, and with this new lower low, there's a lot of work that needs to be done. First a higher low, and then a new higher high if the trend is going to change. I'm not saying it has to happen here from this 207 quarter. I'm just talking out loud about how and if it changes. That's the structure that needs to unfold. Now, where's this 207 quarter coming from? Let's go out to like a weekly chart. Let me grab another year or two here just to see what's off to the left and so we can understand that place a little bit better. If I zoom in, notice that it was the pullback from that little run right there. Okay, so that area of support is the last sort of line of defense before we get to 174. Notice that there's a lack of structure here on the way up, a lack of structure here on the way down. So when looking left, the next major support that we can see is 174. Now, if 207 breaks, that's, a 30-point move to the downside in Facebook, which will not be pretty. I'm not saying that it has to happen all in one day, 1 week, 1 month, but there's a lack of structure in this general area is what I'm pointing out from the higher time frame on the weekly. So back down to the daily, we've talked about bearishness here. We've talked about how the trend could potentially reverse. If it does, where's the first target? Well, the major target is here at 216.35 if it's going to reverse in any way at all. But again, a little bit of a long shot given what we've seen on today's session. If 216 can be recaptured, maybe that starts to get things more neutral from the daily, but still, what would we need here? The same exact thing that we pointed out on the 30-minute. We would need a higher low and then a new higher high to change the trend on the daily. So Facebook, definitely in the camp for the bears. And in terms of levels, the major one to watch out for is 213.52. Notice it's the more nuanced flush point from the 30 minutes if there's a dead cat bounce. But if we resist anywhere before 211, notice that it's nothing more, as we pointed out from the Fibonacci perspective, than a bear flag here on the 30-minute time frame, bearish consolidation, looking for breakdowns and trend continuation on the daily time frame chart. Let's continue along and get into AAPL for, of course, Apple. That's next up in the FANGMAN sort of acronym there. If I zoom in, acronym or abbreviation? Acronym, because it's actually standing for words and it's not a shortening of something. So anyways, you learn something new every day. Acronym, not abbreviation for FANGMAN. Regardless, Apple, what do we have on the daily time frame chart? You can clearly see we're breaking down once again underneath that 171. That's a bearish indication. We're also getting a shorter time frame H pattern, right? So lower high coming in for an equal low. Doesn't really set up the hold this time around of that 168. If we take a look at the 30-minute intraday time frame chart, I would firstly point out that this is really the line in the sand close to 167 coming from the pullback low here, the low of that move right there. If that breaks, that's where we start getting bearish into about 164 quarter coming from this area on the daily, the top of this little area of balance. Again, 164 quarter is the downside target on a break of 167 for you more conservative traders. And as we just pointed out, it is leaning more bearish now that we have the lower high and equal low to this area. So that's how this plays out to the downside. If it's going to turn around here, then I would say it's firstly just got to recapture 171. You can clearly see that this is, not a pretty double top, but a double top nonetheless. If you wanted to use this as sort of a neckline area, 171 is the recapture area. And then after that, I would want to see a pattern before getting involved to the long side. There's nothing about this where, let's just say we start getting consolidation up above. That's not a clean pattern. We don't have a clean entry from that. I would want to see some structure build out back above 171 for the long trade to start to unfold. So Apple, as of right now, leaning a little bit more bearish, of course, because of the daily structure and knowing that we have the lower high attempt at an equal low, okay? So that's what we've got there. I'll quickly take out the Fibonacci's from the high of today's session down to the lows. Notice that there was no dead cat bounce, but the 38.2 is just barely underneath that flush point from in here. So I would start to opt for structure and look around 170 50s, 170 the whole dollar, instead of cherry picking the 38.2, which is 169 80s. I know we're splitting hairs here, but it matters slightly. Okay, so I would really pay attention to this level. Oops, let's switch tools and put that in there officially. This level right here strikes me as being more important. 170 quarter, 170, 170 50. That to me is more important than the 38.2 if there's going to be a move back to the upside, okay? So Apple looking a little bit more bearish than bullish. Let's move along here. Next one up is going to be NFLX for Netflix, of course. Zooming in on the daily, this one we're going to have to adjust just slightly with the hand tool. There we go. We have this area of balance, right? It looked like maybe this hammer would produce a move to the top of balance, and then from there, we would monitor for continuation into that 427. Never happened, right? Sort of more like Facebook taking out the prior day's low, closing weak here down at the prior 2-day lows. This is now a flush point at 387 quarter. If it breaks, this level is no longer really in play. That was a Fibonacci reading from in the past. Notice that there's a lack of structure down underneath. Maybe there's something here at these lows. Let's look at the 30-minute intraday time frame here just to see if we can get a better grasp on where there may be support. I would start to say this is an area of congestion there around 376.80. Maybe that's kind of that level that we were looking at as well. Nonetheless, a little bit of a bearish trade there, and then it really opens up back down towards these lows closer to 352.67. We know that this is more of a bearish outcome here with lower highs, not even making it to the top of the range in that most recent push, from Monday, Tuesday, and now breaking down under the lows of balance, coming in for the equal low. It's setting up as bearish, right? There's no doubt about that. If it does want to turn around, I wouldn't even be looking for longs until we can once again recapture and break out above that 412. I wouldn't want to get chopped around in here. Even if it does make a move higher, that's fine. Let it do its thing. Wait for the better trade, the more confident trade, which is up and over 412.72 for the rotation into 427, as we pointed out earlier. So Netflix looking a little bit more bearish than bullish here. On the 30-minute time frame chart, what do we have? Again, just continuous lower highs, lower lows. So even if we produce a new sort of bounce here, if there's a dead cat and it pulls back, it's got to produce some sort of higher low and then higher high if the trend is going to change. And as of right now, bears look to be in full control with a weak last 30-minute bar as well. Notice that that's the high volume close, of course, the market on close orders. Nonetheless, an inverted hammer. So sellers firmly remain in control in Netflix. Next up, we're going to take a look at GOOGL for Google. That is next up in the FANGMAN acronym, not abbreviation, acronym. And what do we have on the daily? If this would let me zoom in, it's not going to let me, so we'll use the other method. There we go. And let's clean up the drawing set. This honestly isn't looking that great. These are some older levels when it was back at highs. Nonetheless, we have this area of support, this lows. Oops, that's probably why it wasn't working. It thought I was on the hand tool. There we go. And we also have this. We'll take a look at that on the 30-minute chart in just a second. Definitely looking a little bit more bearish as well with the lower high. Oops, we want that. So lower high here after this move, equal lows, just like in almost everything we've talked about so far, looking for the continuation lower into the next area of support, given that the daily downtrend is sort of cementing itself with the lower highs, new lower low. Nothing has really changed from that perspective. This is definitely more bearish than bullish. I mean, no doubt about it. All of that earnings gap up, given back now and some, coming back down into these prior levels. Not too impressed with the activity out of Google. So zooming back in on the 30-minute time frame, we're going to take out the fibs because it was pretty much a straight shot lower all day today. We'll come in from the highs down to the lows. Where's your 38.2? Let's go ahead and draw that in with a regular price level here. Nothing really changes inside of Google until that can be recaptured. And also, it's kind of the lows. It's not quite as, it's not clean, right? But if we do something like that, this is probably the area I would want to see recaptured on Google if I'm going to start feeling at least neutral about the stock. Notice it's the hammer candle from the FOMC day Wednesday. If we can get back above that, that's 27.05 basically. maybe it's more neutral, but as of right now, definitely has to be in the bear camp. Anything that bounces and plays around underneath that 38.2, we know is bear flag consolidation. We're looking for that rotation lower to 2578 on the daily time frame inside of Google. Bears in full control here. That's going to be the theme of today's video. Next up, we have MSFT for, we want the M, not the comma. So MSFT, there we are. And by the way, the keyboard is hiding behind the microphone, so if my voice sounds weird as I'm typing, that is why. Zooming in on Microsoft, giving up that 300 once again, so we had nothing more than a break and retest there, rolling over, closing weak underneath the support we had around 294s, and, next support underneath, not a whole lot of structure. We have 285 quarter. How did we close out on the 30-minute time frame? Fairly bearish, right? A couple of ways we can look at this. So here, an attempt to hold that 293.50s, didn't hold, right? So flush point there, weak into the close, high volume selling pressure there. Nonetheless, looking much more bearish than bullish. We'll come in with the Fibonacci's from the high to the low of the first move. Notice that we did make an attempt at the 50% retracement, but we never closed too many bars above the 38.2. That was technically all bear flag consolidation. We break these lows, go on a nice little run lower. Let's take out the fibs this time from the true high down to the true low. Whereas your 38.2, notice it's the high end of that last 30-minute bar, and it's underneath that daily flush point. So to me, the flush point's probably the structure that we want to opt for, not blindly follow the 38.2. So anything that hooks higher and resists at the 293.50s, so inverted hammer, indecision doji, that's a bearish indication, short under lows for at least an equal low to in here, 290, if not lower into the next daily support at 285 quarter. If it wants to recapture that level, be patient, wait. It's probably going to be choppy in here. Recapture of 300 is the next interesting trade to the long side, noting that that has proven to be resistance here. If we can recapture it here, boom, maybe a higher low off of it and the trend changes. Very speculative. Again, edge has to go to the bears here. Let's continue along in our FANGMAN acronym. Next up is AMZN for Amazon. And if we zoom in on this chart, choppy, right? This one, if there's any, inaction to take anywhere, it's Amazon. Notice how we have multiple days of just balance going sideways here, fake recapture of the 31.76. Now we've closed relatively weak down at the 3-day lows, which does set up the potential for a flush actually. So maybe if you're a really aggressive trader, you can look for a short to do something like that, just for an equal low here around 30.40. I wouldn't push my luck knowing that Amazon's been really choppy around here. Notice that it's been a day down, a day up, a day down, a day up, a day down. Who knows? Maybe tomorrow's going to be a day up again. I don't know for sure. No one knows for sure. That's why this one is probably the one to stay away from until we get a range break of this area right here. We know the more attractive short trade is into the gap underneath, under 30.14, down to about 28.85. And the more attractive long trade is the clean recapture of 31.76 and taking out that swing high closer to 32.55, we'll call it, okay? So Amazon, patience, the more aggressive trader, maybe there's a flush point to be had here around 30.94, we'll call it, if we can open above, right? So I wouldn't take this. I wouldn't try to be shorting it if we open below. Feels a little bit chasey to me. If we can do something like this, produce a lower high and then reattempt, that to me sets up the cleaner trade to the downside for you more aggressive traders. Stop loss has to be right on the other side, because if we get this ping pong type of day and we have green, you don't want to be wrapped up in a short trade, especially with short expiration, if we're making our way up higher towards 31.76. So that's Amazon in a nutshell, probably a patience move into the end of the week. And we'll round it out here with NVDA for Nvidia. Of course, earnings came out yesterday after the bell, and it didn't really do much, right? We opened inside of range, granted lower towards the lows of the prior day's range, but nonetheless rolling over big time on today's session. We are coming close to a critical area of support. 240 is the number to watch in Nvidia. Do we produce a bounce off of it, or does it crack? If it cracks, 200 SMA and the gap down underneath, close to 230.50s is the level to watch out for, and that's definitely reasonable. That's certainly a nice trade here in Nvidia and could be something to watch into the end of the week. $10 range is not unreasonable for Nvidia to move in one day. You can see that its average range is easily about $10. So definitely watch out for that here in Nvidia to the downside. 240 breakdown gets interesting to the daily 200 SMA. If it holds, it's probably not a long trade. I wouldn't really be, well, here you go, right? Again, depending on your own risk tolerances, I cannot tell you whether or not this is the right trade for you. You have to establish this on your own. If you're an aggressive long trader and we start to print some sort of bottoming pattern around that 240, so maybe we get a double bottom off of it, neckline break, maybe that's a long trade, looking for the resistance trend line, but stop loss has to go where? Just underneath 240, because if it breaks, You don't want to be wrapped up on the wrong side of a 10-point move to the downside in Nvidia. So that's for the disciplined, aggressive trader looking for a long here off of support. It's bounced off of it a number of times before. To me, it's starting to become a flush point with all of these interactions, and I would prefer the downside for it to break down instead of hold up as support again. But I wouldn't call you crazy if you took a long here, but respected the stop loss, right? Has to go just underneath because, as we pointed out, you don't want to be on the wrong side of that breakdown. If it does bounce higher, 250.75 is the target coming from this area of chop. If we just scrunch out the 30-minute time frame, you can see that here, right? Big breakout point on the chart. Also, the neckline of that double bottom from there was a little bit shy. It's also where we resisted on the dead cat bounce from today. You can see that right around in here. So that's the first upside target if there is turnaround from 240, and then it's the daily resistance trendline, okay? So that's what I've got for you in the FANGMAN names. If you appreciated this new format of video, let me know down below in the comments section, or if you just learned anything new today, let me know in the comments as well, or by giving the video a thumbs up. That's a lot of ors, but there are a lot of ways you can show support of the channel. So that's going to wrap it up. Don't forget our main channel is linked down below in the description, and with all of that being said, I wish you all a green trading week.